Afternoon, ladies and gentlemen. I'm back with a quick review on gold, silver, and dollar. And without further ado, let's get into the business. So, I'm sure a lot of you saw the confusion and the hype that was around this fall in price in gold here, whereby we had this price falling out of bed like pretty quickly, like in 3 days we raised price action we built for quite a number of days. That was just a retracement, as you can see, since if you could have just used your Fibonacci tool the way I use it and the way ICT teaches us to use it, could have realized that this was just a price seeking a discount before beginning to rise again. And as you can see, price actually did seek a deep discount. It dipped into this inversion fair value gap and these daily buy side imbalance, sell side inefficiency as well. And the proof that these arrays were respected is the fact that the wicks might have done the damage, but as you can see, the bodies, which tell the true narrative of price, were maintained way above both of these arrays. And there's another interesting smart money technique tool that was painted here. As you can see, during this was the 2nd of February 2026. I want you to this low was made during 2nd February 2026, and then this low as well was made during 6th of February 2026. And as you can see, this low is higher than this one. Now, real quick, let's look at silver. Remember, silver is they're like twin sisters with gold. So whenever you want to do your relative strength analysis, that is if you want to decide where to put your money, it's always prudent. That is if you're trading gold, it's always prudent to look at what silver is doing. So as you can see, at the same time, silver equally had a similar retracement. As you can see, it had a similar retracement as well. And now what I need to point your attention towards is the same lows as the ones that were pointed in gold. So during the same day, 2nd February of 2026, as you can see, we created that low, and now during 6th February of 2026, we created a lower low. Now that's a very significant signature in price. It's called SMT divergence, and it usually helps us to select a pair to trade when we are doing a relative strength analysis. So as you can see, silver has made a lower low there, whereas gold, on the other hand, during the same period after that deep retracement, we realized that gold made a higher low. So what does this mean to us? What it means is, according to relative strength analysis, gold is being accumulated more strongly compared to silver, and this means gold is likely to be a leader in this recovery that we're going to see, because since this technique or this break-in correlation has been noted in price, what we usually expect is that the pair that is accumulated strongly, that is if we are looking at a buying scenario, that is when you're studying lows, we expect the pair that is being accumulated strongly to lead that rally higher with lower resistance compared to the one that made the lower low. So due to that, personally, I'll be shifting now my attention fully to gold once again, and I want to see how it's going to behave within this daily sell side imbalance, buy side inefficiency. And the reason why I'm really considering these arrays, because if I can anchor this again, is because this array is quite significant. It's number one at the middle point of the its midpoint, that its consequent encroachment is in alignment with the equilibrium of this range. And apart from that as well, we realize that its upper half is in the premium range and its lower half is in the discount range. So how we will treat this array will determine a lot how we are going to trade as far as gold is concerned. So due to this signature that was this SMT divergence signature that was printed in price, my attention right now, rather what I'm looking out for is for gold to continue going higher. But now I won't be quick to buy it yet until I see this premium array, because this is a premium array. This is a bearish fair value gap here. I want to see it being inverted first. And how will that look like? It will look like price having a solid close above that fair value gap. Once we do that, then we would have inverted it, and then from there it will be now clear and without any doubt that we are likely to continue going higher. So in the event that price closes above this fair value gap and inverts it, then these three levels will be of interest to me. The 75% of this premium week will be the first level I expect price to reach for, and if we reach for it and trade through it, then this should be the next level. And if we also trade through this, then this should be the third draw on liquidity. So I'm really looking at these three levels as potential areas where price might reach for after we see a solid close above these sell side imbalance, buy side inefficiency, inverting it into a inversion fair value gap. So if and when we trade through all this aggressively, then I will have no doubt than to expect that this high will also be popped and we'll see gold creating a new all-time high. But until then, I want you all to understand that when I say things like or rather I point towards levels whereby I expect price to reach for, it does not mean that if now price confirms that we're likely to continue going higher by inverting this fair value gap, that now all my exits will be I'll hold till here, or I don't know, till here. No, in fact these levels are there to guide me in terms of direction, but they are not the ultimate targets for price. So I will do another video another time, whereby I'll be showing you how after you've determined, because this is the higher time frame, this is the daily time frame. Once you've determined bias, like the way I've broken down both I've broken down my expectations on gold based on that SMT divergence it had with silver. Once you've done that, when you go to the lower time frame, you don't have to hold all through to there, unless you are a swing trader. And for me personally, I usually don't fancy swing trading. I'm more of a short-term trader. That is, I take my trades within that session and close them within the same day. I usually don't hold trades overnight. I don't do that. I usually just do my trading within the day, and then I'm done with that. But if you're a swing trader, well and good. But for me, that's not my style. My style is usually just short trades that don't take a long time to unfold, and also give you immediate feedback when you are wrong. So with that in mind, I have now given you my expectations on what gold should do. The first thing I pointed you towards is the SMT that it has down here with silver, and that's a very strong confluence that supports the fact that we are likely to continue going higher. And now the second thing I'm waiting for price to confirm for me before I begin now putting skin in the game, that is now engaging in price once more, is for price to invert this imbalance, or rather this bearish fair value gap. Once price does that, then all the first trades I'll be taking will be aiming towards this as the first drawn liquidity. Once we reach there and we trade through it, then I will consider this as the next drawn liquidity. If we trade through that as well, then this will be the next one. If we trade aggressively and below this level as well, then it will be obvious that price will be seeking to make a new all-time high. So that's how I'm looking at gold at this moment. Now, it's also crucial that I speak on dollar as well. So let me load up the dollar chart. Yes, so this is the dollar chart. Yes, so as you can see, I remember back in December, as we were back in December, I remember we had called price lower, and then we had this retracement during January, which went and just took out the buy side above here, and then ever since we saw a really steep fall in dollar the whole of January before we had this retracement again. During this time when we were having this retracement is the same time when gold was equally really dropping. So as you can see in this situation here, we get to see that price, let me mark this fair value gap here. There's a fair value gap here, in there, and since we have this volume imbalance, we'll incorporate it as part of the of the and see after price made this imbalance here, which we've also included the volume imbalance as part of it. Price retraced again, and it met a number of confluences here. Apart from the fair value gap here, there was also this breaker here. This one. So it found both an imbalance and a breaker. This one. And as you can see, if we can also plot our Fibonacci just to see where we are in terms of premium and discount, these were really nice premiums that price found resistance at. As you can see, there was this imbalance and this breaker as well, and once price breached the equilibrium and entered the premium levels and found these arrays here, we saw a nice turnaround there that proved that still we are bearish in dollar. And with that in mind, I'm looking to see whether, let me now take this off for more clarity, and this one as well. So now we are looking at a situation whereby I want to see whether we will find, there's this new week opening up here that happens to be in alignment, or rather in confluence with another bearish fair value gap here. So I want to see whether price will find resistance there and form a swing high and start rolling down again. And once it does that, I'll be looking at these discount weeks gradients, that is, it's 25%, 50%, and 75% as the possible drawn liquidity. And if we blow past that, then I'll be looking at this low as the next draw on liquidity for that move lower. So I have a bearish stance on dollar as long as we find premium sensitivity within these levels that price is trading at right now. Since we've already found premium sensitivity in this fair value gap and breaker, which were in the premium, and now we've rolled over, created another bearish fair value gap. I want to see that preferably left partially open, and price to find premium sensitivity within this area. And once we see that, and that will be proved by the formation of a swing high and a bearish candle that drops lower. Once we see that, that will be confirmation that we are likely to come for this level first, then this, then this. After we've traded to these zones, if we see a strong breakthrough them, then this low will obviously be the next draw on liquidity. So that's how I'm looking at dollar, and that's how I'm also looking at gold and silver. So now excuse me. So now what I'm going to do is I'm going to sit on my hands, wait for price to do its thing. I'll wait to see whether we'll invert this level. I won't engage in any buys until I see this level inverted. Once that level has been inverted, that would be the go ahead for me, because inverting this level will do two things for me. Number one, once this level is inverted, this high once this level is inverted, I will use it as a discount array now to more like, think about it like a ladder that price will use to continue climbing to these levels up here. The other thing, it will have broken this swing high here. Is this swing high right here? Let me show it to you properly. There's that swing high there. There's that swing high there. So once price breaks above that as well, it will be a clear confirmation that now we have also broken structure to the upside. So those will be two birds that would have been killed with one stone. With that move higher, we would have inverted this fair value gap and broken structure to the upside. And now that will be all the confirmation we will need to now start scouting buy opportunities to go higher. But if we fail to invert this level and we see price beginning to breach this midpoint of this fair value gap again, then that will indicate that we are likely to see a small consolidation before price again now decides what it will do, and I wouldn't engage in that as well. So what I'm waiting for is to see whether we close above this fair value gap. Well, that will be all as far as my expectations for gold, silver, and dollar is concerned. I've pointed why I'm expecting bearish prices in dollar and why I'm expecting bullish prices in gold. And I've also explained why my focus is on gold and not silver. And I've also explained when I will start hunting for buy opportunities in gold. Until then, I'll just be sitting on my hands and waiting for the perfect opportunity. That will be all from me today. I hope you all have enjoyed and learned a few things and gleaned some insights from this presentation. If you like what I'm sharing here, you can give us a thumbs up and subscribe to our channel. And we also do have a Discord channel where we share daily and weekly live insights into price like this one that now even go deeper. And we also actually we are offering free lessons on our Discord. And if you are interested and you want to learn trading and how to read price the way I do, you can feel free to join. I will be periodically posting the Discord link on my socials, so feel free to contact me. I will you can always find me on social media. My handle is at Whitmark. Otherwise, I wish you all a lovely evening. May God bless you all, and let's see each other the next time we have a discussion.